In this video you will learn to enter here with a small stop loss and take profit levels. You will also learn where to buy or sell in different market conditions, so you will never be confused if the market is bullish or bearish. There will always be something for you to trade. You will also learn to make sniper entries like this one with zero drawdown. That will give you an insane risk to reward ratio on your trade setup. You will also learn to scalp any foreign exchange market. Even the 1-minute time frame will be easy to trade. They say the trend is your friend, but this video will help you to enter a trend like a pro while risking a small portion of your trading account. Catching swing lows and swing highs in the higher time frame will be much easier, and lastly, you will learn what to avoid with this trading strategy before opening any trades. Hello guys, welcome back to Easy Forex Strategy. Before we begin with this trading strategy, let's firstly go over the topics that we are going to cover in this video. And also the timestamps will be in the video description below. Grab a pen and paper because after watching this video you will have an edge over other traders. So the first topic of the video is how to draw supply and demand zones. This section will help you to identify where the market has a potential to reverse. On the second chapter we will cover what I have discovered myself, which is called a confirmation candle. This will help you to confirm a trade in 4 or 5 ways. Plus we will also cover when to take a trade and when not to take a trade. I am sure some of you have a basic market structure knowledge, but we will also cover it with basic and a little bit of advanced levels so that you can understand this trading strategy. When you reach the fourth topic of this video you will also learn how to use all the time frames so that you can make a full analysis in the higher time frame, then make an entry in the lower time frame. We have covered fair value gap in the previous video, but that doesn't mean we cannot add more valuable information to it. So you will also learn it with even more information to boost your trading skills. After we have completed all the topics then we can move on to the trading plan, where I will show the rules of this complete trading strategy, including on how to take profit levels, how to make an entry, how to trade different market conditions. It won't be complete trading strategy without including some examples, so we will do 10 examples together on different market condition to train your eyes to spot trading signals very easily. If you watch the video till the end you will get some amazing goodies that will help you on your trading journey. And lastly, this video will include a free PDF with 100 pages extracted from this video. So if you want it, watch the video till the end to get the search code for Telegram to get the book straight away. Without wasting any of your precious and lovely time, let's get straight to chapter 1 of the video. First of all, before we can draw supply and demand zones, we have to first understand what is the meaning of them. As you all know, we like to make things very simple for everyone to understand. Supply is when we want to take short position, or you can say on supply zone we will be looking to sell for the market to be bearish or a downtrend. Then on the demand zone you will be looking for the market to be bullish or to the moon like cryptocurrency. I believe if you know this then you won't confuse the two, but once you are good with them there is no need to name them anymore. First of all, I know some of you are still new to trading. I decided to cater all pros and beginner traders. So what you see here is a Japanese candlestick. We have a bearish candle on this side. And we also have a bullish candle on the right side. When you see a red candlestick it will show that the sellers are in control. Then when you see a green candlestick it will show that the market is going up or the buyers are in control. And another thing to point out is that you have to know where the open and close of a bullish and bearish candle is at, because that's the only difference between them. Throughout the video we will use those words a lot, so make sure you know them clearly. We can also see that a bearish candle opens at the top while the bullish candle opens at the bottom. This strategy is not very hard because what you need to understand is just an engulfing candle. To spot it easily on a chart is to first understand that every candlestick have a body, so when the next candlestick is bigger than the previous candlestick with a body size, they will form what we call an engulfing candle. And also they should be different in color. Like from these 2 examples. We have 2 ways to draw supply and demand zones. The first one that we are going to start with have more trade setups. But the entries will be early, so using this one you will never miss any trades, but you will have a potential to risk more. So to draw supply and demand zone, you will draw it on the previous candlestick high and low. On TradingView we will use a rectangle tool which can also be found on any trading platform. As you can see, I started drawing the zone from the previous candle's low and then to the high. And you also have to practice a lot to find them easily. This will also train your muscle memory. And then on the demand zone, we will do the same thing by drawing the zone on the previous candle on the bullish engulfing pattern. And also throughout the video I will show you a powerful pattern when choosing the right supply and demand zone. And then after drawing the supply zone, then the zone will become a potential sell area. And finally on the demand zone, it will become our potential buy zone, but we will deal with that throughout the video. Now let me show you my favorite way of reducing the risk in the market and supply and demand trading. In this section, I will show you another way of drawing supply and demand zone, which will also give you less trades. But the trade have lower risk and higher rewards. And look closely on the previous candles open. As you can see now, when we draw the supply zones we will start from the open of the previous bullish candle to the high. Then on the demand zone we will start from the open of the previous bearish candlestick open and then to the low. After doing so you are now able to draw all sorts of supply and demand zones, but we are not even done yet, we still have a lot to cover in details going forward. Now we are getting even deeper, and please do not move forward if you don't understand how to draw the zones properly, because in this section you will understand more on how to draw the zones on different engulfing patterns. Now look closely at the highs, we can see that the first one here. The wick of the bullish candlestick is higher than the wick of the bearish candlestick. Then on the third one here we can also see that the bearish candle is the one with a higher high now. So now let me show you a complete way on how to draw the supply zones. On the first and third one is what we call low to high. Then on second and fourth one we will draw them on body or on the open then to the high. Let's draw all supply zones in 4 different ways. On the first one we will draw from the low of the previous candle to the high. On the second one we can see now it's body to high. We will start from the open of the bullish candlestick. Then to the high. On the third one we can now see that the bearish candlestick is the one with a higher high. So we will start by drawing the zone from the low of the bullish candlestick, then to the high of the bearish candlestick. Then lastly on the fourth one is the same as the third one, but we will start by drawing the supply zone from the previous bullish candlestick's open then to the high. Before we move on to the next chapter of the video, I would advise you to draw everything down so that you can train yourself. Because if you don't do that you will have a problem going forward, because on some chapters I will assume that you understand, but I will try all my best to give you all the information needed for you. I know you will be asking some question on which time frame does this trading strategy works. It works on all time frame like. For example you can use it in the 1-minute time frame for scalping. Or in the daily for long-term trade setups, but you will learn to do that when we move forward. And another question that you will be asking is, which pair is great to trade this strategy? To answer that is it works on the Forex market, cryptocurrency market, indices market, stock market, synthetic market. In general all I am saying that it works on all markets and in all different time frames. In this chapter you will understand how to draw a demand zone in different market conditions. On the first one we can see that we start drawing the demand zone from the open of the previous bearish candlestick to the low, and we can see the bearish candlestick is the one with a lower low. Then on the second one, we will start by drawing the zone from previous bearish candlestick's high, then to the low, and now we can see that the bullish candlestick is the one with a lower low. And this pattern is 70% powerful. On the third one we can see that we start drawing the zone from the open of the previous candlestick, then to the low, and also we can see that the bullish candlestick is the one with a lower low. Remember this pattern by heart because it is one of the most powerful pattern. This pattern is the one that can give you a sniper entry most of the time. Then on the last one we start drawing the zone from the high of the previous candlestick, then to the low. All in all when drawing the zones, Just remember that the lower low will be where you start drawing the zone, then you will choose the opener high on the previous bearish candlestick. Now that we have covered all different ways to draw supply and demand zones, we are moving forward to confirmation candle. That I have discovered myself. All I wanted was to confirm if the market will really move when price reach the supply and demand zone. So I found out that there are two different confirmation candlesticks on the zones. So I studied them for a period of 2 years until I found the solution to help me out. So now you will learn all the different types of confirmation candle. And please stay focused on this chapter because this can be a little bit challenging. So let's begin. If you have a demand zone like this on your chart, you will predict like this that the market will push higher first, then come down to the zone before pushing higher one more time. But there are other rules that we need to follow first to ensure that we have proper rules set. After having a demand zone, there's some candlesticks that we need to see before we can confirm. The first one is that we need to see a bearish candlestick before a confirmation candle. The second rule is that we need to see price action touching the zone. Then lastly we have to see a bullish candlestick. And guys, these rules must follow each other like that. But let's do an illustration. Step 1, after the demand zone, price will move like this. Then what we need next is bearish candlestick before a confirmation candle. Step 2, you will see price coming back to the zone with a bearish candlesticks, and sometimes it can be one candlestick. This is also called bearish candlestick before a confirmation candle. Now we can see we have bearish candlesticks. And also guys, look at how we drew the zone is from the open of the bearish candlestick then to the low. Step 3, now that we have a bearish candlestick before a confirmation candle, the next step is to wait for price action to touch the zone. Then we will wait for the market to close with a bullish candlestick on the zone, and then that will be our confirmation candle. Step 4. Now we can see that price touched the zone. Now this will be where you will have to wait as a trader for the market to close with a bullish candlestick. So when the market after touching the demand zone, and then when the market close with a bullish candlestick, that candlestick we will call it a confirmation candle. On the last step we can see that price closed with a bullish candlestick. And this candlestick is also an engulfing candlestick. So when you see something like this is when you can enter the market. But wait. We have to reduce the risk. So keep watching for that. And this is a confirmation candle with an engulfing candlestick, so let's see another confirmation candlestick. Confirmation candlestick type number 2. When price reach a demand zone it will close with either bullish engulfing candlestick or any other candlestick beside an engulfing candle. As long as price touch the zone and close with any bullish candle is called a confirmation candle. But there are two different types of touches on the zone. Now, before we move on, let's talk about the two types of touches on the zone. As we can see from this example, price touched the zone with a bearish candlestick and then confirmed after. But sometimes the market can touch with a bullish candlestick and then confirm at the same time. On this example we can see that price touched the zone and also confirmed at the same time. So when you do your back test also remember to include all the rules because they will come in handy. Now that you understand how to draw supply and demand zones, different types of confirmation candlesticks, let's move on to entries. We will start with sniper entries first. We will go over each one of them to show you how to sniper each entry. On the first one we can see that we have a supply zone first, then we have a bullish candles. Then before a confirmation candle we can also see that the bullish candlestick before a confirmation candle is the one that touched the zone here. Then we also have a confirmation candle which is not an engulfing candle. So after this confirmation candlestick, you will put sell limit order on the open of the bearish candle or on the high of the bearish candlestick. And also we can spot that the zone was created by a pattern with a higher high being on the bearish candlestick. This first pattern will give you low risk entries. But it doesn't happen a lot, so keep that in mind. Then on the second one is still the same, but vice versa. And the stop loss will be below the zone, but with added spread size to avoid being stopped out easily. Even on entries, you should also put the buy limit few pips above to avoid missing a trade, because you know some trading brokers can play with your money. I won't mention them on this video. On this third and fourth example, we can see that the market closed or confirmed with an engulfing candlestick. So the entries is still the same, but this one doesn't happen a lot. Because engulfing candlestick likes to move the market very quickly. You will be hoping to get your entry to be triggered, but is likely to come and trigger it. But I will also show you how to trade the engulfing candle as a confirmation throughout the video. This is the type of patterns you should avoid at all cost. Sometimes is not worth it to trade just because the market is open. So every time when you see the market making long wicks like this, no matter how much if the market is going to drop lower, just avoid this kind of patterns with long wicks. Because we know we have two different types of confirmation candle. On this part 3 you will learn what will happen on the next candle. And 90% of the time it likes to do that. So on the first one we can see that price touched the zone and closed with a candlestick that is not an engulfing candle. So the next candle is likely to come and retest the open of the confirmation candle. On the second example we can see that price closed. Or we can say price confirmed with a candlestick that is an engulfing candle. So on the next candlestick you will see that price action is likely to come and retrace back to the previous candle's open, which is the bearish candle, this one over here. And once you understand these two types of confirmation candles, you will be able to focus on pure price action alone. And you will also know the next move that the market might do. And lastly, you will enter the market with confidences every time. This confirmation candle entry can be used with other trading strategies like support and resistance. Let's do a proper entry and stop loss with all the rules so that you can understand even further. Here we can see a setup. But let's say we want to write all the rules on the chart, we can also do that step by step. Step 1. We can see that we have a bearish candlesticks before a confirmation candlestick. Step 2. Wait for the market to touch the demand zone. Step 3. Wait for the market to close with a bullish candlestick after touching the demand zone, this is also a confirmation candle. Step 4. After the confirmation candle is when you can decide where you want to put your buy limit order. And we can also see that price closed with a candlestick that is not an engulfing candle, so this means that the market is likely to come and retrace back to the confirmation candle's open. This should 100% be your first decision to make an entry, okay guys? Then for sniper entries we can use 2 and 3. 2 being on the open of the bullish candle and 3 being the low of the bearish candlestick. Step 5. You put your buy limit order and then wait for the market to trigger your entries. And also don't forget to put your stop loss to protect your hard-earned money. Step 6. Yes, sometimes you will be lucky to find that all of the entries are triggered. And as you can see the stop loss is below the zone with added spread size. This spread size will depend on the broker that you are using. I will put the broker that I am using in the description below. Lastly, don't forget to use proper risk management. Before we can do real chart examples, let me firstly explain what you are going to learn through the video. We are still going to cover how to make take profit levels properly, full trading plan that you need to follow with this trading strategy, and how to avoid bad trade setups at all cost. As we can see, we have 3 major rules over here. So we will start with this example 1 here. I will zoom in so that I can explain that area step by step. So please stay focused as we move forward because some of the examples will start to be difficult for new traders. Now that we are zoomed in, the first step is to identify a supply zone. And remember, on supply area we are only looking for sell setups only. After we have identified our supply zone, the second step is to find a bullish candlestick before a confirmation candlestick. Now that we have a bullish candlestick, the next step is to wait for the market to touch the zone. Then lastly is to wait for the market to give you a bearish candle close, which will be our confirmation candle. Now we can see that the bullish candlestick before a confirmation candle is the one that touched the zone here. So the next step is to identify a confirmation candle. Now we can see that we spotted a confirmation candlestick, which is also not a bearish engulfing candlestick, meaning price is likely to come and retest the open of that confirmation candle. And lastly, what is left is that we have to mark our sell level areas. Now what is left is for you to reduce the risk as much as possible because we already know that the market is showing momentum of pushing lower. You will mark the entry levels on previous highs and lows of candlesticks inside the supply zone. After marking those entry levels, then when confirmation candle close, that's when you should put a sell limit order and wait. And we can see on this example the entry number 1 was not triggered, but entry 2 and 3 did trigger. Even though it skipped one candle to trigger. Throughout the video, we will also touch on how long you should hold your limit order, so stay tuned. Here on this example too, I will give you a moment to study it. Also, another thing that is different from example 1 is, we have 2 bullish candlesticks before a confirmation candle. And the hint is that price was just trying to fill up the fair value gap, which will be covered soon. Your entry will be something like this. As you can see, you will never have a pain of being into the negative balance for so long. Is either you are in profit or the market decide to stop you out. If you are wondering what could invalidate your trade setup, then you came to the right chapter. Price will invalidate your trade setup if price trade below the zone before a confirmation candle. Or if a confirmation candle trade below the zone before closing bullish. So now where we should put our stop loss will be invalidated. And as we can see from this example, price spiked below the zone before the market can make a confirmation candle. This is another example of price invalidating a setup. We have a demand zone, then bearish candlestick before a confirmation candle. But when that confirmation came, it started by trading below the zone first. So every time when you see something like this, just avoid it because where our stop loss should be will change. I hope I am very clear on this one. What you need to understand is that in the market we have what we call expansions. This can also be seen in the same time frames. Like from this example, we can have different entry area, but different in range expansion. As we can see on the first example, the expansion is very small compared to the second example, which extended even longer. As traders, you should know that the market moves in waves. So that topic will be in another video. But if we get 200,000 views on this video, I will consider doing it as early as possible. So now let me show you the comparison on a real chart. As we can see on this small range, the market is following all the rules needed to enter the market. Then after that small range, the market made an impulsive move. Then it decided to correct to make even a bigger range before we can see another move to the upside. But if you have time, please go and learn Elliott wave. There are a lot of materials online to learn. But if you want to learn it, comment below. I will give you some recommendations on where you can learn it for free. On this chapter you will learn basic market structure. We are not going to dive in very deep. Because all the examples will be simple and clean for you to understand. So on this first example you can see that the market is bearish. Making new lower lows, but once you see that the market has broken the last lower high. Just know that the market has the potential to change direction from being bearish to bullish. Then on to the second example is just the same thing, but vice versa. When the market is bullish. As long as the last higher low is not broken, just expect the market to keep moving higher. But once you see that the higher low is broken, just expect the market to change from being bullish to bearish. But remember, on a real chart things won't be the same as this illustration, and it can be very challenging. You just need to practice market structure a lot more than anything so that you can inject that into your muscle memory. This structure on the left will look something like this on a real market chart. Just a reminder again, the market moves in waves. Once you see impulse and corrections, you can't unsee it forever. Let's do few examples on a real chart so that you can see how the market will behave on a day-to-day basis. On this example you will understand why the market changed from being bullish to bearish. First of all, what you can do is to draw the market structure on a chart so that you easily spot them. So let's draw the market structure on this chart. As you can see now, the market stopped making a new higher high, but it decided to make a new low. So that's why the market started to be bearish. Let's label it with more details. As you can see, this was the last higher low that was broken, then the market started to push lower with waves. I know some of you will ask about those internal waves. If we move on to the lower time frame they will be very clear, but for now we won't do it. So let's do another example on this, on how the market moved higher. On this side we can see that the market was bearish, also creating a reversal pattern. So if we draw a market structure on that area, we will see that the market broke the last lower high, and then the market changed direction from being in a correction to bullish. So let's label this area. As you can see now the market broke this last lower high, then it made a new high. This can be called a broken market structure. The downside of this is that the break in market structure has to be also impulsive. Meaning the candlestick should be very strong to make it as a valid break of structure. So let's do another example on this side. And see how the market changed direction from being bearish to bullish. Before we can see how the market changed direction from being bearish to be bullish, let's first start by marking up the lower high. This will also make things very easy to identify how the market changed direction. Now that we have marked our lower highs, everything will start to be clear. And remember, when the last lower high is not broken, the market will keep going lower. There is no way the market can reverse or change direction without breaking any structure. If it's not clear on another time frame, go to the lower time frame. You will always see a break of market structure period. Now let's draw market structure on this side. You will see that is challenging, but not really that hard. You just have to put a lot of your time on the chart to familiarize yourself with them. And also to add to that, you need to do something like this. Starting from the monthly time frame until to the 1 minute time frame and on 20 different pairs. I promise you, we'll see some changes into your trading very quickly. If you understand market structure properly, this will also benefit you a lot. Because you will never hold a buy limit or a sell limit for too long. Let's say you have a buy limit on this zone. But price is still playing around. Then once it breaks the second high, that's when you can close your buy limit order. Just remember that you should close your order on the second swing. Before we can move on to the last few topics of the video, let's start with time frames. Because I have noticed on the previous video so many people missed this part of time frames. So this illustration shows the higher time frames on the left and their lower time frames on the right. You might ask yourself a question, why should we use this? The reason to that, if you can make your analyses, let's say on the 4 hours time frame. But when you look at your capital you see that you cannot afford to trade the higher time frame, that's when you can decide to use the 15 minutes or 5 minutes time frame as your entry time frames. This chapter should not even stress you at all. I will also put a link in the description to get the full video about fair value gap. But this is very simple guys, in simple terms, fair value gap or an imbalance is a space between the wicks. Mostly it happens when the market shifts very fast. It will create what we call an imbalance in price action. Sometime it can happen like a gap in the market, so price is most likely to come and close those gaps. As you can see from this two candlesticks, there is no space between the wicks. So that means the imbalance was fulfilled. But this two candlestick, we can see that the wicks don't touch each other, so this will create an imbalance in the market. To make it clear, we can mark it by drawing a zone in between so that we can make it visible. Let me show you guys how a fair value or imbalance will be closed. As you can see the wick, if it was like this, then the gap will be closed. But why do we need fair value gap into our trading style? We need it to make a proper trade setup with more valuable information. Remember when you used to enter a trade too early? Those days ends today and right now. Let's do this example. As you can see, we have an imbalance before a demand zone. Then that means we will be sure that price is likely to come and close the imbalance and test the demand zone before moving higher again. So our trade setup prediction will look something like this. Let's look at a real chart example. You will see that mostly price will come to fill the imbalances, then price action will touch the supply or demand zones in reverse. You can see this long candlestick. That's a huge shift in price action, so it created a huge imbalance in the market. And we can also see that price also created a supply zone. And we can see that price traded up again to fill up that space and move lower. So in this case we will take advantage of fair value gaps before any supply and demand zones. On this one here we can also see we have a break in market structure here. Then we also have an imbalance here, then a demand zone. The price confirmed, then it moved higher. Here on this example we can see that the market structure is bullish. Because there is a low here, followed by a high. But price made a new higher high here. Like as I said in the beginning of the video, you will be able to catch this higher lows. Look closely. We have a demand zone that was drawn from the high and to the low of the bearish candle. And we also see we have an imbalance before the demand zone. So price action came down to fill it up, then it moved higher to make a new higher high. So next time when you see this kind of setup, make sure that you don't miss it. Now that we have covered most of the things for this full trading strategy, let's move on to the trading plan. So that you can know all the rules to follow. Everything that you have gained from this video will be used going forward. This is a step-by-step guide on how to make your trading signals. 1. Make sure you have a break of structure. 2. Draw or identify your supply and demand zones. 3. Check if there is a fair value gap before your supply and demand zone. 4. Then you just have to wait for the market to come to the zone and give you a confirmation candle. 5. Always make sure that you are using proper risk management into your trading. 6. Take profit levels or previous swings. This plan demonstrates how you should use your higher time frame to lower time frame. Always make sure that in the higher time frame price confirmed. Then when you move on to the lower time frames, you just use the same pattern of break of structure. Before we begin with the 10 examples, the search code for the book in the Telegram is this one. And also guys, before I forget, make sure that you are subscribed to the channel so that you will never miss any of this amazing content. And lastly, if you have a question, don't hesitate to contact me. You will find my contact details in the Telegram group. The link is in the description below. On this first example we are going to use this rules so that we can make a proper setup on this 5 minutes time frame on this Forex pair. So the first step says we have to identify a break of structure. So let's do it. We can see that even price action closed below this previous lows, so now we can say the market has the potential to move to the downside. So the next step is to find a supply zone plus a fair value gap if available. Then we will also make a prediction with all the take profits, targeting lows on the left. This is how we make a signal. Then the next step is to wait for the market to touch the zone, and we can see the market did touch it. And we can also see that we have a bullish candle before a confirmation candle. So now we have to wait for the market to close with a bearish candle on the supply zone. Also, price must not trade above the supply zone before confirming to the downside. Now we can see we have a bearish candle close, so this means we can decide to enter even on the close of a candle. When you are in the lower time frames like the 5 minutes and 1 minute, you can miss a lot of trades because the market moves very fast. But if you practice to execute your trades very quickly or practice your aim bot, then you will be able to react very fast on some trades. Then the next step is just to hold the trade and leave it to hit your take profit. And we can see take profit 1 hit. And then we can also see all take profit hit. But it doesn't mean all your take profit will be hit every time. So now what happens if you have missed the first entry? Let me show you how you can tackle those kind of trades. When the market is moving to the downside, the market will always create some zones. And some of them will fail. As we can see from here, the market created a supply zone with a very small range. And we can see now that we also have a bullish candle before a bearish confirmation candle. And price also touched the zone. This will be those fast entries in the market, like when you want to add more into your trades. And we can see that now we have a bearish candle close, so the next step is to decide if you want to enter at the close or at the retracement levels. Your entry is triggered now. Even if you miss the sniper entry, you can still enter here on this candlestick. And also make sure you put a stop loss above the zone, unless if you want to keep depositing money into the market. Nice. So don't be surprised when you start making this kind of trades. I just hope this trading strategy will help you to reduce your risk in every trade. Like as I said during the video, that you will never win all the trades, even when you are correct on your analyses, and you won't enter every trades. We can see it first here that the market never confirmed on the supply zone, so this kind of pattern will invalidate the whole trade setup. We can also see it here. We can see we have a break of structure, a supply zone, plus a confirmation candle. But price action decided to trade above the zone again, which will eventually stop us out. So that is why it is very important to use proper risk management in every trade. Let's do this Bitcoin on the daily time frame with some mood. We will start by marking our previous highs for take profit levels. We can also see that price action filled this fair value gap. We can see a break in market structure here. Then we will find a demand zone and then find a potential buy area. Use this one pattern over here. And guys, even if in the videos most of the examples were bullish, remember it's all the same, but vice versa. So always use this pattern. You can print this page and put it on your trading desk. I will put a link in the description below for a printable page. Let's explain why this demand zone has failed. And like as I said before, that avoid this annoying long wick setups. So let me explain this setup. We can see that we have a break of structure. Price was just trying to fill up this fair value gap here. And again, make sure you avoid this kind of setups at all cost. Also, we can see a demand zone. Plus this area doesn't even have a break of structure. Let's do this example here. You will see the same thing again. We have both patterns with fair value gap. And we can also see that we have a demand zones here. And lastly, price also confirmed to the upside. Let's do another example. We will use the same rules over and over again. We can see now the break of structure. Plus a confirmation candle. Always make sure that you target previous highs. Like on this one here. On the same chart we can also see more setups. You can pause the video and study them. But you can use the free PDF. Sometimes when a pattern fails like this, without any confirmation candle, you can still follow the trend by giving the market what it wants. This is a huge stop loss. I would always avoid such setup because I am more focused on reducing the risk as much as possible. I would always wait for the market to give me this kind of trade setups. So guys, now that we are coming to the end of the video, I would include some clips and examples until this video ends. Good luck throughout the year 2023. I wish you all the best, always work hard to achieve your dreams.
dry. Oh, well, I don't wanna jinx it, baby, and twist myself at the spine. Don't wanna overthink it, baby. It's just twist your body and mine. Baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Let's not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak my mind. Oh. Baby, you give me ice and fire. You're chilling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh. Anywhere you go.